Hello guys, my name is Sheikh Nasir. Today we are going to discuss what is accounts payable in accounting and how we record accounts payable with the help of debit credit rules, and what is the difference between accounts receivables and accounts payable. Okay, let's discuss the definition of account payable. When we purchase over goods or services from our supplier or creditor and payment will be made within a year, it is called accounts payable. Accounts payable are our current liability and shown our balance sheet in liability section. If you check any company liability, then you must read out liability section in the balance sheet. Okay, let's discuss the examples of accounts payable. Bills payable, bank accrued overdraft, interest payable, income tax payable, salaries payable, Sundry creditors, and provisions. If all these accounts paid within a year, that is called accounts payable. The debit credit rules shown on our table. When accounts payable is increased, it should be credit, and when accounts payable is decreased, it should be debit. Okay, let's record the transactions of accounts payable. For example, we have purchased goods from our supplier on credit. Then purchase account is debit and accounts payable will be credit. The debit credit amount should be equal. Point to be noted, purchase is an expense account and it should be debit for first time, and accounts payable is a current liability, and if we record first time in our accounting, it should be credit as per debit credit rules. After few days or weeks, if we made a payment for our supplier, then these accounts payable will be debit with amount 1 lakh rupees. That this is the rupees currency. And if you made a payment from bank, then bank account will be credit, and if you made a payment from cash account, then a cash account will be credit. Okay, let's record another transaction. If any company make transaction on accrual basis, we know very well in all companies at the end of month or at the end of year, all expenses are recorded through accrual basis. For example, accounts department makes a salary sheet at the end of the month. So we record account salaries expense in our books. Salaries expense debit 5 lakh rupees, example, and salaries payable will be credit 5 lakh rupees. Salaries payable is a current liability account and that is called accounts payable. For example, we have received electricity bill or gas bill or water bill during the month, then electricity expense debit and utilities payable account will be credit in this case. Okay, let's discuss the difference between accounts receivables and accounts payable. The main difference between both accounts, account receivable is a current asset account, and accounts payable is a current liability account. Second difference, if we record account receivable first time, it should be debit, and if we record accounts payable first time, it should be credit. This is the main difference between both accounts. I hope you understand what is accounts payable and how we record accounts payable in our accounting. Please like this video and subscribe our channel and share this video in social media and WhatsApp group. We are also providing virtual bookkeeping services in very nominal prices. Okay guys, take care.